Hi, guys. Welcome back to Morant's Rants. Plenty of good information, a little bit of motivation, a whole lot of truth, no financial advice. Guys, it's late. I'm up late. Doing the homework, as always. I went over the AMC earnings call, okay, guys? Read on about it, heard it a couple of times. Want to give you my insight. I'm going to talk about the things no one's talking about. I get that. I'm not against any investor whatsoever. You guys make all your choice decisions. If you guys come to the agreement that AMC is a good investment, then you can have that. Have at it. I don't care either way. But I want to give you the insight to it because guess what? I think people should know. So here are the hard facts. AMC made more money this year than it did last year. Same quarter. Yes, last year, COVID mandates had it locked down. There was seating arrangement issues. There was a lot of things. They just weren't fully operational. So this year, they made $785 million versus $148 last year. It's 5.3 times more. Good job on the number, guys. They're making improvements with a poor movie schedule. There was nothing out there except for Sonic, really, right? And a crappy Batman movie. But the attendance was up. Almost 40 million people walked into the movie theaters this year, in this quarter, versus last year at 6.8 million. So if you do the math there, that's 5.75 times more. The ratio is close. The ratio is off by about 45 basis points here. You want to be a better operator. The more people you have, the more money you should be making per capita. Like the way you do it, just poor Patreon. Like, so as they go through, they're going to spend some money. Inflation's here. They should be spending more money. The revenues just don't match. If you want it to match, you had to come in at around like $820 million, but it's okay. It's still an improvement. Let's go to operating loss. Operating loss, they actually lost $337 million this quarter. It was big, but it was mostly cash burn, and we'll talk about that in a minute, but versus the $566 million they lost last year. So an improvement of about 1.68%, or times I should say. So when you do those ratios, guys, the 5.3, the 5.75, and then the 1.68, that 1.68 should be a huge number, a better number, because you have such high increases on revenue and attendance. But it wasn't the case. They actually only had an improvement of about $229 million. I say only, don't let me be the Debbie Downer here, okay? I get it. They're doing better, but they could be doing better, right? But we'll talk about more. AMC assets. Here's the problem, okay? They went down $500 million this quarter. From December to now, they have lost over $500 million, this movie theater company, which is drastic. No announcements, no nonsense. They didn't even try to tweet or do any interviews. They didn't try to rev your engine with NFTs galore. They didn't do any popcorn dreams. They still lost $500 million in assets, guys. It's a bad business model, but I'm on their side if they can come up with something great. Let's figure that out. Next, cash burn, $430 million this quarter alone. They had $2 billion at one point. They were bragging about it. They had 1.8. They had 800. You know what they had last year, guys? They had $800 million last year, cash. They have 1.1 right now. They're not that far off from last year. And that's after diluting every single share, getting all this money at the market offering. And guess what they're going to have to do again? They're going to have to do something to that effect because they have to have $148 million on the books. And that's an agreement for anything they've ever pushed out, all their notes. Go read the fine print, guys. There's 2 agreements there that they're pushing out. And I'm telling you, 140, let's just call it 150, minus what they have on hand right now. They have 1.1. They're sitting on $950 million cash. Last year they had the same equivalent. They had 850. They're $100 million up after all of the pumping and the great year that they had on all these movies, whether it be Spider-Man, anything else. No, I know what's coming in 2022. I know you guys want to watch Top Gun. I know you guys want to watch Toy Story, the Buzz Lightyear one, Jurassic Park. There are some good movies coming out. But I tell you what, movies don't move this market. You know what moves this market? Great business deals. And unfortunately, they had a slew of bad ones. And it's going to cost them. It's going to cost them their whole company. And it's tough, man. It's tough because it's not about the $5 billion that they're upside down. If you look at a current total debt, $5.5 billion, it's not that. It's that you can never dig yourself from underneath. You can't dig a new way out. You can't lift this load off you. It's just not possible. Because your investments aren't where they're supposed to be. And I'll explain. So the rent increase was $45 million alone. Rent increase was $45 million. They have deferred rent. They're not even paying their rent. But the rent that does come up, $45 million. There's interest on everything they do. They might not have to make payments for another 5 years. They even have one senior note pushed out to 2029. You think these guys are still going to be around 2029? The same set people? They already sold their shares for retirement, half of them. So this company is floating. I get that. And I wish them great improvements for next year, but you need drastic improvements. So let's talk about one. HYMC. That's your investment, right? It's the one they're boasting about. So the warrants and what they're worth, they had 23.4 million, somewhere in that range. And you're telling me unrealized gains, which I didn't even know you could put on there, 63.9 million. That was at that date after the pump on 29th. If you really look at the stock price right now, it's at $1.25. It's already lost 100% in 2 months before this report. So guys, they're actually only up 6 cents per unit. Guys, 6 cents puts them in the 1 million to 4 million range. I'm just ballparking it for you. I'm giving you the 1 week average, and they're going to make about $4 million off that investment. $4 million. You're like, oh, they made $4 million. No. Guys, they are burning. You would pay off interest more than you would doing that, but that is not what you think it is. HYMC is not an investment to make money. HYMC is a buyout, a handout for Mudrick. And we know that. We've had this conversation before because they learned how to make money. Did you guys hear the earnings call? Did any of you? Because I know Trey didn't, right? Trey missed it. I don't know how you miss it when this company's made you $1 million. You miss an earnings call. But hey, I'll go with you. So the earnings call said, Adam Aron said, and I'll paraphrase, he said, we learned how to survive during the pandemic. By making the investments that people made into us, we understood how to leverage that debt. So what that means is they realized that they could do what Mudrick did for them, and what Silver Lake, and what Wanda, and what anyone else is doing for these guys, prolonging their death. Well, that's fine. How are they making that money? Well, they're really not. They're getting sued, right? So I have 3 ways that you run a business. One is you're going to have your expenses. You're going to have your income, and then you're going to have to leverage your debt with that. And that means, hours or even liabilities. And in this case, liabilities are someone else's assets. What about general liability? What about punitive action? Like, that is real right now. People are not talking about this. In the earnings statement, you go all the way down to the bottom. It's right there. Every single action. And when you look at these actions, let's just say they're worth $20 million a piece. I'm going to count to you guys at least 5 actions right now. The Hawaii action. They already paid $18 million, and this is in February of this year. Why is no one talking about it? Why was it not front and center? Because nobody wants you to know the truth. The Gantaluga, whatever the hell this is, action, yeah, the same thing. And what are all these actions surrounding? What do they all mean? Manual, Kenya, which one is it? Dinkovich action. What does any of this mean? Well, it was all based off of this, and I have the notes here somewhere. It's right here. It's the fact that Adam Aron agreed, and AMC agreed, to do a $600 million loan out, right, to get helped out here. And they pushed out these convertible bonds to all the way to 2024. And since then, they've made bad business deal after bad business deal. This is all stemming from the Carmike movie theater deal. And right here is where they got sued again and again. So this Carmike movie theater deal was actually worth about $1.1 billion. And then the Odin movie theater deal was worth about $900 million. They were down $2 billion in 2017, 2018. All the shareholders were pissed. Shareholders were pissed because they lost value. The shares used to be worth $31 a share. And I know what you're saying. You're saying to yourself, well, hold on, Marantz. $31 million share is nothing. $31 a share is nothing. Look at how much we've been worth in the past. No, you're a dilution of the share right now. Okay? Well, you guys are so far diluted, 4 times the float. Can you imagine the shares would be worth $121, $120, $100 right now if this never happened? But what they do, they sold themselves out to the masses. Silver Lake came in, easy $600 million. And that has since increased over all these years via interest. But all these actions are upon you. I don't even have to beat you up with them, guys. I'm going to tell it to you like this. What are they doing about it? They're policing themselves. On December 31st, 2019, the company received a stockholder litigation demand requesting that the board investigate the allegations in the actions and pursuant to claims on the company's behalf based on those allegations. You see, people, you, retail, anyone, came over and said, what the hell are you guys doing? Why are we doing these things? Why are we trying to raise capital? Why are we trying to buy things we don't need when we're already a profitable company? Because it looked shady, and it was shady. We started doing backdoor deals that didn't make sense. This is years ago, before you guys ever invested in the company. And I get that part. You guys are all here for a squeeze. I understand. But fundamentally, they are so happy to have retail next to them. AMC fell backwards into retail, and retail caught them. And then retail paid them. And these guys all cashed out on you. Now, this is why I'm skeptical of this company. This same company and the board of directors determined not to pursue the claims sought in the demand at this time. Additionally, on the next complaint, on September 23rd, 2020, the board determined not to pursue the claims sought in the demand at this time. Do you know what happened a month later? After that? After they've diluted their shares to infinity, they know the price is going to zero, they know this company is down $5 billion. They lifted the requirements for the board of directors on how they had to own the shares for the company. They were able to sell as many shares as they wanted to. There was no requirements for insider ownership of this company for the next 11 months. And in those 11 months, the insiders managed to sell every single share. Guys, I can't make this up, but on this earnings report, all of this information is on there. I didn't go grab this from websites. I grabbed this from the earnings report. The thing that no one talks about, the thing that no one reads. All they do is hear a phone call. Hear Adam Aaron sprinkle it on. Oh, when it's time to pounce, we're going to pounce. Really? Oh, when we know just no action doesn't mean that there will be no action. You know, whatever it means. It's one of those don't mistake kindness for weakness. Okay, well, don't mistake me for being dumb because I'm not. Allow action right here in front of you. This is a complaint that happened, and it's an action against the two board members from Wanda who are no longer on the board of directors. And as you go through this, these guys tried to dismiss all claims, everything last year. These are 6 cases currently against AMC right now because of their business practice. 6 cases by shareholders. They're not getting sued by vendors. They're not getting sued by the banks that they owe money to. They're not getting sued by shorts or longs or whomever. They're getting sued by people. People that are pissed off that they're making the most idiotic business moves in your lifetime and it's costing you your investment. Show me who's going to sue them next. I'll wait. Guys, all this is true. It's all factual. It's all here in the earnings statement. But if you guys want to stick to the hard facts, we'll stick to the hard facts. Even the hard facts don't make sense. Even this doesn't make sense to me. Losing $500 million in a quarter. And all you can quote it to is, oh, there wasn't good movies. There might not always be good movies, guys. But there better be good business. Period. Have a good night, guys. I'll see you tomorrow. We'll keep it going. Rants, YouTube. You know the deal. Peace.